And we're back in the Crash Labs today with me, the great and powerful Ivan Bebek. Ivan, you know, I've followed you a long time. We were actually overlapped in Ghana. I was at Extra Gold, Keegan.
I remember that.
And, it's been unbelievable to watch your career. I think there's, to blow a little smoke up your ass, and I want to get into it, but there's like a handful of presenters in this business, and I'll call them, I don't want to say promoter because it has this bad connotation, but I believe I'm a promoter. I think you're a promoter. We're reminding people, entrepreneurs, but we're, just not satisfied by just doing one. We got to keep going. There's lots of things to do. And so there's very few people. There's Robert Friedland and yourself. I think I would, if I were to make a list of like the top 3 best pitch guys, that when I listen to them pitch their deal, when I listen to them take me through their project, by the end, I got that hand wallet reflex. And it's something I was cognizant of before I was doing it, watching you do it. Mm-hmm. And so what's that been like for you? Is that a conscious thing that you honed, or is it just natural that you just kind of did your thing and that's what happened?
Well, when you mentioned Robert Friedland, so when I got in the business, my dad was one of Friedland's first friends in Vancouver. My dad was a developer, but he was in the markets for a bit in the 80s. And so I heard a lot of Friedland's stories. And I heard of this amazing showman. I heard about all these different things and how he sold Voisey's Bay and all these great things. And that inspired me a lot. And going into the sector, I just had this drive and energy that I wanted to be more, make it exciting. I didn't want it to be the typical. And I started working with very smart but very boring geologists, guys who found major mines, and they were really dry and interesting to me, but to the investing public, it was something that I didn't want to be near that. I learned my projects extremely well because I have really good geologists I get to work with, and that gives me a level of conviction. I also invest a lot of money alongside everybody. So when I talk about a project, I'm talking about an investor to investors versus as a CEO trying to market something to sell to investors.
Right, you're actively investing yourself.
I'm actively there. And so I'm thinking about how important that is. I've got a lot of natural instinct for geology. I don't pick drill holes, but I joke to myself that I could. I let the real guys do that. And I know when you fall in love with something, you get a passion. I'm a visionary and a strategist, so I can see a shape of a deposit in my head as I get the pieces of information from the geology. It becomes really, really infectious to kind of think about that. And that comes out. I just found a way to be comfortable in front of the camera to do that in front of investors. So I think the level of conviction is high because of knowledge base. The quality of people that feed me the information are really high. The thrill of what if, and that's what I live for. What if we get this right? What if we drill this hole? And that's really inspired me a lot. And then just naturally energetic person, passionate. I wear it on my sleeve. It's really good on a good day when things are going well, but it can be challenging when times are more adverse and market conditions aren't there. But at the same time, I've learned the other important ingredient is perseverance and the ability to pivot when things go wrong. So I've employed a lot of strategy. I have plans for everything. I don't plan failure. I plan for success one way or another. And that gives me a level of confidence that this will eventually work really well if it's not working now. Because the industry's odds are always against you.
Now, when you say what if, like you think of the what ifs, and I think you kind of answered the question, but I'll ask it anyway. How often in your history, like whether it be Keaton or Caden, or any of these assets, how often does it actually work out the way you envisioned? Is that eureka moment or that big pivotal moment, the thing that you were kind of like holding in the back of your mind is that what if scenario? Or is it sometimes a curveball and you just go with it and you have to adapt quickly, like to your point, like pivoting? And is it more often just like being prepared, but then adapting to surprise? And
great question. And a couple of stories here, short ones. Keegan, early days, we got on it. It started to advertise as a discovery early. We had that guy by the name of Kevin Thompson from Newmont come over because we're in Ghana next to Ahafo and all those mines. And we drilled about 300 meters out of the 3.2 kilometers of strike length. And he said, maybe 600,000, 1 million ounces of gold here. And I disagreed. And I felt like there could be 5 million ounces. We found 5.2. Mm-hmm. And my disagreement wasn't ego, it wasn't bias. It was thinking of all the results we took and the expression, the footprint, the pre-drilling. And kind of building a model in my head. As I said, I visualized it, and it ended up being 5.2 million ounces. So I was like, oh, that was an accidental on purpose kind of thing. And then Caden came up, and we got into this thing. We drilled 100 holes in a row that hit, and led to the sale to Agnico Eagle. And during that that phase of that whole project, I was just looking at the drought of Mexican discoveries, the challenges that Agnico and others had to be in a good jurisdiction at the time. And I was computing that we had about 7 different majors that are mid-tiers and majors that were looking at what we had. And I made the early call that we were going to sell it, which was very dangerous to make because credibility's on the line, and we ended up selling it. And I just felt it. I felt it in my gut, like, at the time, this is an opportunity that could really grow. It's really easy. It's really
Somebody's
consistent.
gonna want this.
Someone's going to want this, and it's going to go. And then Oren was $100 million spent between 2015 and 2020. And when he got onto this company, I met some geologists from Newmont that worked in Ghana that came over to us, Mike and Dave Smithson, Michael Hendrickson and Dave Smithson. And coming from a major, the scope of what they liked was huge. And for me, once you start to have the success, as you said, you get addicted, you want to go for something bigger, right? What I got wrong was how long it takes to bring a big project online. And I didn't get it wrong in the sense of being ignorant that it takes time to get these things on. I saw a pathway that I thought would be much shorter, but the counter positive there was the project got a lot better, like Sombrero and Copernico, and I'm sure we'll touch on that. It got a lot better over the decade that it took us to get in there. And what I've learned is if you put the time in and you're patient, you persevere on a big grid swing, it's going to be worth it in the end. And right now, it's worth it for us. That and one other thing that didn't go right for me was the COVID interruption. At first, it was incredible. It was the false start of this resource market. Everything that's happening now made sense to happen then. We were just all early, a little bit ahead of ourselves. When I split Oren into 3 companies, 2 things that I took on new managers, new CEOs, and I learned that I can't replicate myself, and you have to be patient to let people find their footing, find their way. But we lost the market. And my whole theory of why I brought the split up was we're at today's market, and let's split it. It's easy to find capital. Market's taken off. This is the start of the bull market. Let's give everybody 1 + 1 = 5 or 6, right? Kind of thing. And when that market fell apart and disappeared, it didn't just go bad. It went to the worst in history, which taught me that this is going to be one of the best bull markets in history. And it was kind of the setup and how these things kind of work and cycle. And so from that one there, I got it wrong. I got the market timing very wrong. And I'm very honest, I got it wrong by timing, but not by where it was going. I was just early again. And as we went, our group shuffled a little bit. Mike left, and there was some things, that didn't work out as much. And in times of adversity, there's good relationships can fall apart.
100%.
And for me, I just held on to the assets because I believed in them when Mike brought them in with me and Dave and Sean and my partners.
Like the conviction of putting this all together made sense at the time, and it still held true beyond that.
5 years in a row, we pounded the streets on Oren, and I put $5.5 million I bought in the open market of Oren stock up to $3.75 per share. So I was fully convicted, believing, but I was also educated quite well by Mike and Dave and the team there, the technical team. And so when the group kind of unraveled a bit and things all got really difficult, financing through that was tough. I spent a lot more time in Arizona, Scottsdale. I found a big investing group down there that really helped keep things going. And we raised a lot of money in that time frame. I think $150 million from 2021 through 25, maybe more. And because these were very expensive projects and big swings. But I just believed in the technical conviction of the targets, the what if factor. What if we got Sombrero right? Could it be another Las Bambas? What if Tier 1 silver does have that big silver discovery we dreamed about, plus a big porphyry or a big copper discovery next to it? And I never lost sight of my original conviction. And today, as we're about to drill the next phase at Sombrero or Tier 1, or you look at Committee Bay, you look at the profile of Fury, these are incredible companies with incredible swings that could make that top 10, 20 if the what if worked, right? And that's what I live for now. I'm not in this business to make money for myself. I've done very well through the successes I've had. I'm trying to make a difference and have a history-making discovery on the belt, right?
Yeah.
I got involved into Nevada, and there's a story there that is absolutely crazy if they get it right. And so far, it's pointing in that direction. But I've fallen in love with very big assets, and Friedland led the way here because he got very fortunate with Boise's Bay, but he's always gone top of industry, top of the world. And I believe it was Doug Casey and Friedland who were making these comments. I can't remember exactly who, but it's just as much work to look for a small deposit as it is for a monster, but there's a different degree of finances that are required and patience, right? The first stock I ever bought was African Minerals in 1995. I was in grade 12. I got in a car accident, got some money from the insurance people, and bought African Minerals at 60 cents a share. That is Ivanhoe Mines today. It took 17 years to go public, and that was a long time. That was half my career, more than half my career. And it came public, and at one point Friedland was buying it at $3, $4 before it went public to clean up the structure. And it opened and went down at 50, 55 cents a share. And a lot of people were telling me Friedland's tired, he's not what he was. There was a lot of negativity around him. And I was like, gosh, the guy's number one, like the number one showman in the industry.
Yeah.
And but it was fogging my lens a bit. I bought a lot of stock at that point. Unfortunately, I sold it early, but to do other things. But I did extremely well. I wish I held all of it. Would have been worth a fortune. And I realized quickly that people don't expire in our business because of market conditions. Age goes a lot longer than you realize. But once somebody learns how to do something really well and monetize it really well, that gets better, not worse over time. And Friedland got better. He got way better. He built way bigger companies. Now he's a major player on the world mining scene. Right?
Correct. He's in the White House with Trump, and they're talking about doing mega things. And
first CEO in history
Yeah.
to get in the White House. So from my end of it, my initial mentor really grew and showed me that you can go through being hot, being cold, and come back. As long as you've done things well and you have that skill set, you keep going. Ross Beatty was somebody I met right around the sale of Caden, and incredibly brilliant guy. Taught me a lot about what was important versus what wasn't important, and got me to focus a lot better and look through a different lens. And he gave me a lot of good, small but really impactful words of wisdom along the way. And the quality of what he's done and the credibility and selling 15 or 16 companies.
it's insane.
The Broken Slot Machine, that's a serial performer.
Mm-hmm.
He's not Friedland in the sense of how he addresses a project, but he's the number one in person of sold companies. And I don't think anyone will ever, he's the Tiger Woods of selling mining companies,
sure.
right?
Yeah.
You look around at Justra, who's been notoriously liquid, performed extremely well, and
Paul Matisic in that camp as well.
Yeah. And what I've done is I've listened and watched some of the best, and I try to take a little bit of everybody's business and incorporate into my own.
That's what I try to do.
Yeah.
There you
and
go.
So, the smartest guy in the room is the guy that knows that somebody else is smarter at something else, and don't try and do it all yourself. Where I've been blessed, and through my whole career, it started with Dan McCoy, with Keegan and Caden, and I'm working with him again today. But getting the geologists like Tim Kingsley working with me, I don't talk enough about him, but we're about to drill some crazy targets, which he's really brought to the next level. But I've gotten to work with some of the smartest geologists in the world. And one thing common about every one of these geologists, when I compliment a geologist, they're all humble. Mm. They have very ambitious conviction, but let's find somebody that knows way more about skarns than we do. Let's find somebody, a world expert about this, so we can make a better decision, right? And that humbleness in this business is so incredible, and that's what you need, because you don't know everything. No one's capable of that.
You know what I find with it too, what I've been learning is that as far as geologists go, it's very important to have the know-how and the knowledge of geology and the scientific insights, let's say. But so much of it's like processing. It's like a manufacturing line. And the best ones for me, I work with Greg Matheson. Him and I did Newfound Gold, and then now with Pirate Gold. And I've had the luxury of working with some really great geologists. And the common theme, I think now when I look back on it as I go, the best ones are the ones that like that core shack, that, core cutting, thing, the road, the pad making, the signage, the health, like they're all over all of the operational sides to the point where it's all easy. You show up there and everybody's doing their job and they're managing like a machine, like an assembly line. And to me, that's like a really, really good hallmark of these geologists as a promoter type, as a geologist, but I happen to be a geologist, but also as the money raising side of things and the storytelling side of things. I find it really, really helpful to have that side of the business totally under control.
That's a good point. I like that point that you made. It's the level of organization they have at the site, but also in their head, right?
Right.
And when you go around the world trying to raise money, as you know very well, you go into some brilliant geologists and from major mutual funds or fund managers, and you watch your geologists get grilled. And the answers are not, maybe, I think. They're like, oh, well, the reason for that the level of depth of knowledge is real. And that shows me how much wider their knowledge base is of what they're doing. But as you said, you go to the site, everything's pristine, everything's organized, every piece is moving sequentially together in a very positive manner. So that gives me the trust. And if you use an analogy of this business and you say, what's it like? It's like finding a brain surgeon to do brain surgery on you, right? Mm-hmm. And who do you want? You want a really brilliant surgeon, but that has very clean tools and knows exactly what he's doing and why he's doing it and everything else, right? And there's also lucky geologists that not as deep as that. And, this business is a game of luck. I would like to say it's 70% luck, but you can put yourself in a position to be lucky if you take swings long enough and hard enough. I fell in love with brand new discoveries early on. It's the most money to be made in the business. I remember Aurelian was a really good example, 20 cents to $44 in 6 months. And when you see that and you see what discovery can do, that's the thrilling part of it. Building a mine, we built Keegan. I went to go and start Caden during that process. I followed it, but it was everything that could go wrong goes wrong. The engineers...
Did you do it again?
Build a mine?
Mm-hmm.
Maybe.
If it was good enough.
Yeah.
But like your proclivity is to no longer necessarily entertain building... I mean, you can't say because you never know what the asset needs, right? But... or the company can go, but
I would
your preference?
I'd bring in a team that builds mines.
Yeah.
And I have an idea of some really good ones out there to build it.
Pad yourself with
I would just
for all the barrage of bullshit that's going to come your way.
I would take a back seat on being overly involved. I'd find a legendary mine builder.
Yeah.
And this goes back to what I was saying before. Find somebody smarter who's done it, more experienced. And then I'd collaborate with them on messaging and how to make sure this thing went really well. You look at the major mining companies and the amount of money that's been made, and something came to me the other day was a lot of these guys are going to retire this year. And there's a big gap with people that could take over in those roles. And they've made so much money, or they're making them, the majors have performed extremely well. And it's hard to keep people motivated to go through the grueling hours of running a major mining company and the headaches and all of that goes with it. It's not the sexy part of the industry. It's a fundamental part that has great value, but it's a life commitment. Exploration, where I like it because I think it's harder to find something, much harder than it is to build something that's good.
Yep.
And that's where the risk versus reward really appeals to me. I'm looking for 50x return, or more on a swing that I'm taking, from the pennies there. And having been lucky enough to be part of it a couple times where it's gone well, it's just something that inspires me and the rest of the team, and creating something out of nothing or finding something from nothing is really, really fascinating.
It's super fascinating and super fun. I think the treasure hunt, that's the same thing that gets me excited as well, is the thrill of the chase, the thrill of the discovery. I love that aspect of it, and I couldn't imagine being focused on any other part. I did production. I did a lot of things in it, but played a lot of roles and wear a lot of hats in the whole, assembly line that is mining. But I love the discovery angle, and you do it so well. Now you're talking about, and I'm interested. This is genuinely curious from my perspective, because I'm sort of learning this now as I'm taking on more projects and tackling more commodities. You can't spread yourself too thin. But at the same time, you do have a capacity to handle a few different things. And so, from my perspective, do you find it hard to put yourself like you can always get a good CEO, and a CEO can check a lot of boxes. They can. There's a lot of roles that a CEO needs to do, but one of the primary roles is to raise money, and it seems that the role that you play, and likewise for me, is to bring the money to the party, to bring that storytelling to the party, and to support that market, to get that thing, talked about. Do you find it frustrating sometimes to put your name that you have to put your name to it to raise that money in, and then somebody else is spending it, and you're kind of like overseeing it, but not totally?
The best success I've had is when I control everything.
Right.
And you become a controlling person because you have to know every inch of the business to be successful at having conviction with it, right? Yes, to answer your question, it's hard not to be present with your name on it to do that. I get asked the question because I'm involved in a few companies, what's your time management like, right? And if I look at some of the CEOs that I brought in, Tim Clark over at Fury, raises money extremely well. He's taken a very, very methodical approach where he didn't break his pick in the bad market. He was patient for the bull market, and the company's doing great. He's got it in great shape and form. I couldn't do much more there because the company was in really good shape when I stepped off of it. We had sold Dolly Varden the Homestick Ridge project, and it was a great platform, and he's done a great job of making it better. I talk to him periodically, but he's got a good vision, a good path. Peter Dembicki had a much harder challenge with Tier 1 Silver because we came out when Silver Short Squeeze was on. Company opened and went to $1.90 per share, and 250 million market cap without a drill hole in it.
Oh,
and
it's hard to sustain that.
We were so excited because there was 80 different samples that run from 1 to 300 kilos silver over a 20 square kilometer area, all these different veins, that you kind of got that grade frenzy on it. And so we were sharing that excitement. We drilled it. We're drilling it again now after 3 years, but he went through the drop from silver from 32 down to $16, $18 an ounce. And I have to commend him because he won the world champion in rowing, and he has this level of perseverance that he just never quit. And so as much as a CEO can be good and drive something forward and market and monetize it, having the courage and the perseverance gear to hold on, never quit, it's a quality that I look for. I've had this for my whole career. I coach from time to time, but they've both grown up extremely well, actively involved there. And then the third one is Eminent Gold, which is something that I was, Dan McCoy came out of retirement. He gave us 10 years in Ghana and Mexico. And he's like, look, I've got one more left. And we kind of went really far into the greenfields concept theory, found a really cool project in Nevada, or a few of them, and started there and couldn't get market traction. Market wasn't there for that early stage of a project. Drilled a few holes, Kinross bought in, and now it looks like it could be another Carlin trend being discovered.
And everybody's into it, and it's fine. And
Kinross bought in, and
Right.
that changed it. But where I finally put my name on it was when they drilled their last hole, 9 meters at 3 grams, and disseminated oxide was just like, okay, this looks real. I came in, and then the company changed a lot for the public perception, and Dan became the CEO. It's not because I'm better, just I'm known to a big investing crowd, and I've got a reputation like you of doing good due diligence and betting when it's time.
Yep.
So last point there was time management. I've got a few hats on. Major copper swing with Copernico, the silver in Tier 1, gold and Fury. Fury I'm more removed just because that's grown so much as something it's kind of found its own legs. Tier 1's at the pre-discovery stage, so it's on the edge. It's drilling as you and I are sitting here now, but I got to a point where my answer there is when one of my companies that I'm involved in hits something meaningful, that's where I'll bring in the cavalry, show up and elevate the company's profile. But until they hit, I can't really push things. I don't like to push ahead of the geology. And yeah, it took time to train them, but they're doing great. And yeah, it's hard. You can't be everywhere at once. You have to. At Copernico, my team is incredible. From Margarita, our manager of investor relations, from our geologist, from our CFO. It is so well run, but culturally is what I'm most proud of, is the culture it's created amongst the team, that everything's turnkey. I walk into things now that I would never let anyone do or help me assemble and they're done for me, and I can just take them to the next level and work with those plans.
Isn't that fascinating, right?
it's-
How it helps to delegate, just having a lot of things to do and having great people, and then all of a sudden things that you would never have delegated get done, and you're like, wow, that's actually better than probably I would have done myself.
And they're done really well.
Yeah, you're
Exactly
like, I
that
can
point.
run with that.
Yeah. So last point is the culture. Culture's key. People have to like each other. Older, younger, more experienced, less experienced. That's been the biggest challenge, is managing people of anything that I've done in my career.
And have you had like a sticky core investor base from project to project, year to year, thing to thing, like that tends to, still supports you to this day, and there's the same kind of crew behind Keegan, let's say, or other things? Like, have you had that benefit of having, to be able to carry a lot of that forward?
Yeah, it started in my early 20s when we started Keegan, and that group has predominantly stuck. Like, they're all long, everything that we're doing. I've learned that you can only go so far with that group before you need to really find new.
Yeah.
Not to replace them. They're incredible. I wouldn't be here without their support, and I'm super thankful, as everyone is, that gets backed by great people. But when you go through a bear market and you can't really turn the profit, turn the corner, create the liquidity and do that, it becomes very heavy for those people to keep backing, the scenario. So instead of sitting there and trying to dance and say something different and do that, I just started to create a much more competitive environment, and the market's certainly helping, the project's helping. And I want to create a very competitive environment for a lot of new, good quality investors. And in our role, you have to keep redefining your network, because your network will come, they'll make money, they'll leave, they'll get older, they'll make too much money, or whatever it may be, it can change. And so I haven't stopped. I've complimented them a lot. I've done a lot of new over my career, and right now, because of the threshold of the projects I'm going after, I've been able to I'm attracting some very, very new substantial groups of investing, and it takes away the financial strategy that you worry about, and it creates it more of a financial plan that you're strategizing with multiple parts into to make a more competitive environment, possibly better performance should things go ahead.
Now, we haven't seen generalists in our space. I'm going to say for probably 10 years, 12 years. Let's call 12 years.
Yep.
We haven't seen like solid generalist base in the space. And even then towards probably 13, I'd say anyway, but whatever, semantics. We haven't seen generalists in the space yet. And I still don't think we have a ton here yet, right? At least not in our snack bracket, right? And so with the advent of like medical marijuana and the cannabis craze to crypto and blockchain and all these things, we've seen the format of pitching and conferences and capital markets and capital flows. We've seen just sort of like a whole regime change in these other sectors. I didn't personally participate in cannabis at all, but I was a student of it. I watched it. Mm-hmm. And same with blockchain and crypto. It was not really my thing. AI I played, but I played it to a mining crowd. So like for you, are you watching all of this and how digital media and podcasting and all these new mediums of connecting with an audience, how that's changing? And what do you think the mining industry needs to do to be ready for this? Because generalists are coming, but maybe I'm alone in this. Maybe you don't agree with me, but I just feel like we're not ready.
You're absolutely right, actually. And I'm a huge advocate for education. And I'm in the process of setting up a company out of the U.S., Underland Capital, and it's going to be a merchant bank and a market media company. But I'm going to do a series of YouTube channels. How do you find a mine? How do you make money finding a mine? How do you impact communities? All kinds of all the pertinent parts. I'm going to take the educational route. Why? Because to close the gap between generalists and the market, it needs to be formal, not informal, right? I've been on a lot of panels and with people like Rick Rule, who's brilliant, and others. Mm-hmm. And I find our conversations on the panels tend to focus around the basic, obvious demand and supply equation, but not about
like the macro themes.
Themes, but the driver that's going to make the metal worth more, the discovery worth more, all of those factors. And that's the economics that's really highlighted, right? We talk about we're running out of copper, all these things, but not too many people are talking about how do you find a mine? How do you make money off a company that's finding a mine? How do you choose a company that might find a mine? What kind of risks involved? I was just on the sustainability panel for PDAC talking about the work we've done and great work we've done in Peru, and I realized there's a big difference between how a lot of projects are approached, and the big ones or any project in this day and age, they're going to have to adhere to a really, really sensitive ESG movement, the social and the governance and the environment. And so our industry has changed, the paradigm has changed in a few ways. One is the easy discoveries have been found. The mining industry is much cleaner with much stricter rules than it's ever had, which is good and bad. Really good for the planet, the environment, but very difficult to finance, and it takes a lot of time. You cannot buy trust. You have to earn it over time with these communities that have these big projects and big opportunities. And then the capital flow, it's driven by performance. And we're finally seeing performance in Agnico Eagle, incredible performance, and some of the other majors that have doubled, tripled, gone up 7 times Agnico, I think, or 8 since they bought Caden.
It's been incredible.
And so you need discovery to really draw in that generalist crowd. People need to see a few 50 cents to $40 a share like Aurelians. That will draw a lot of crowd in. But all of these people that have invested into cannabis, crypto, AI, these were all really common, much wider audiences. Either people use those products or
they just understand them better. They can understand it better.
Except for Bitcoin, I don't understand.
Yeah,
Bitcoin
that's weird because it's completely enigmatic. But everybody invested anyways. But
it was it was new, and it's the future, right?
Yeah.
But nobody out there talks about how much metals do we need going forward. You never hear that in dinner conversations across the U.S. and these generalist crowds and stuff like that. Small percentage of people actually recognize that. When you go buy a car, you don't think, oh, there's 189 pounds of copper in my Tesla versus 39 pounds of copper in a Toyota. That's not electric, right? Mm-hmm. Nobody thinks to that extent. I wonder where this copper comes from. Are copper mines really dropping in value over the world in grade? Yeah, it was 2% when I entered the business. Now it's 0.5%, the average amount of copper in a ton of rock. People are not really catching up to it. So what I like to say is the world is not ready for the new demand curve that's driven by innovative electrification, modernization. A lot of the U.S. was built 40s, 50s, 30s. A lot of that needs to be rebuilt, and that's one of the more developed economies in the world. China's expanding. India's coming online. This demand part is very obvious. It's a very steep curve, like speed of technology. But you go back to the population part, which people don't talk enough about. And in the 80s, there's half the population on the planet there is today. So the old paradigm, Dr. Copper, as we describe it, the economy, used to be driven by a non-electric society that was not using all these metals, and it had half the population we have now. So when you apply that new curve, we are in the very early innings of a very tight market, and discovery's fallen off. I think there's 3 sizable discoveries since 2015, Filo mining being one of the most recent here. Friedland's has been in discovery forever, and I believe there's another one in Africa that's come on by the Cobalt, the Bill Gates, the company there they created. But out of 15 years or 10 years, that's nothing compared to what it used to be, just in copper alone. And you look over to gold. I think Snowline Gold is the last one in the last few years, 2 years ago, but there hasn't been anything since. And when you look at the profile of production, all these mines, you kind of have to go chase low grade now because there's a lot of low grade metal around. And that's going to be slow and expensive and massive social movements to try and build these massive pits. But you can't crush rock any quicker. There's no technology solution yet to mine faster. And when you implore a multi-billion-dollar capex, 8 to 10 billion now, or 11 billion for some of these things to bring them online, you're going to need sustained prices at a high level for some time before we're going to be able to get the banks to lend and put that money up. So the market, the demand is moving much faster than the supply. Discoveries are harder than they've ever been. For us, it's great because if we find something of quality and value and scale,
it's worth more.
We get worth way more.
Yeah.
But the chance of finding that is way harder than it's been before.
Way harder. I think there's a few kind of playful ideas I've been thinking about on this too, because like oil for me has always been political, right? I don't touch it much or at all. A little bit in my PA with guys that are advising me on some oil things that they know it better than I do, and which I don't advise anybody to be investing on someone else's conviction. But in the case of petroleum, which I have some, I do it with advice of others that know the space better. That said, I've always kind of said, like, it's too political. Something can happen. Some political, like, look at what's going on in Iran. You can wake up one morning and oil can go from, your play can be done. And I never really felt that was true with gold or the precious metal space. Copper, either. It's a global market. But as we've seen, like, there's been a huge shift to reshoring manufacturing. We've got tariffs up. We've got walls going up between economies. And I wonder, because, I mean, a lot of what you're talking about security of price and how can we assure these things? Well, when I look at that, I go, well, a lot of the driving there is the refinement. And so it's like, well, do we have the refineries? And so what's going to stop the Chinese refineries, like they've done with a lot of critical metals, from, dumping into the market and driving prices down and squeezing out the competition and then, controlling it. And some of these things to control 100% of, So I wonder if we're going to end up in a future here, is it possible that we get a fractionated pricing? Like, if we, like, maybe in South America, copper goes for a different price than it goes for in China, or it goes for a different price in the United States than it goes in Europe. Like, is that a possible outcome? And if so, what is, like, if that's not off the table as a possibility, what about, like, the corporations themselves? What about, the big automotive manufacturers, the big General Electrics, whatever, getting into our pool of the mining game? Like, do we really have this under control? Like, what's stopping Elon Musk from coming in here and knocking everybody out, saying, I want this, and the Boring Company is going to be the fucking best miner in the world by a long shot. Watch me go. And I'm going to when I'm finished mining this, I'm going to mine Mars and asteroids and all the rest of it. Right. And all of us would be going, we're for sale.
Good points. And I talk about an economic world war that's been going on for some time. And it's been trying to corner the commodity market. And if you follow governments and what China's been doing, first movers, 100-year thinkers going around, we've all seen the U.S. trying to buy Canada, Greenland. We know there's metals. We also know there's national security reasons why for it.
Sure.
We saw what happened in Venezuela as well, national security, but the oil that was going to China from there. The tariffs, interestingly enough, you will pay differently for price of copper in two countries, one without tariffs, one with, if you can move it across the border, but you're going to have tariffs moving it, right? So there is going to be a price discrepancy of the tariffs up. Spending a lot of time in the U.S. and watching the current administration try to bring everything back home, which is the big goal of the tariffs. There was number one consumer-driven society in the world, and China is the number one supplying society to the consumers. So they got to a point where capitalism can almost backfire because you don't have enough from made in USA in the States. And that's, I think, a big movement from Trump and the government to try and do that. Looking at the future of metals, could you get a disruptor like Elon Musk coming in? I mean, a couple of things have happened here that have never happened in history. One being Robert Friedland in the White House talking about critical metals, and kudos to him. That's incredible that he got to that point, and kudos to Trump to recognizing that it's a real serious movement in his administration, right? The second one is the investments that they've done into junior mining companies by the U.S. government. And I'm seeing a paradigm shift because the problem we talk about is real. I don't know what the future landscape looks like, but most wars are generally driven by commodities. We've all seen oil in the Middle East. We're seeing the Iran thing go off, and oil will always be a factor. Copper is not the new oil because oil will never come out of our society. You can't replace it.
Of course.
And there's the value or the volume of oil-driven products is too high, but copper is like oil, that it's going to be used in everything that's powering what you drive, where you go and do. So I think now that we're finally entering the super cycle of the commodity market where metals are becoming harder and everyone's trying to get in, I think there's going to be a breaking point where you do see somebody like Elon Musk or somebody of that caliber, maybe a Chinese entity or what have you, who's already investing a lot, take a level up and go buy everybody and kind of monopolize that market. And then we're going to enter a whole different paradigm of challenges.
Yeah, because in front of us, it seems like we've never had a better setup for like a more impactful, grandiose bull run across the board, whether I'm talking about copper or gold or silver, any of these things, right? I completely agree. The copper case is clear. And I mean, we bet very heavily on that space here. But, and so we have a similar conviction there. I just kind of, I've been going through this now and going, to my what ifs and going, I haven't played out these scenarios in my mind, that if we're there and if these things are worth what I think they're going to be worth, and the world's going to clamor for these commodities the way they're going to clamor for them, but then politically things are going to fractionate. If the old world order is how much global metal price indexing and trade was free trade across, the Western economies and beyond, and Eastern economies together, was establishing these sort of like benchmarks for us to have some price stability and homogeny across the globe for a lot of these things. And some things we didn't have it for, like LNG. We didn't have it for, there's a bunch of things that, you could perceivably play different prices, depends where you are. But, some things like copper or, gold or silver, it was ubiquitous. And so now, like, oh, fuck, man, like, I think none of this is off the table. There is a potential scenario that we could have we're celebrating where we're going with this industry, at least thankfully. We're finally getting our day in the sun. But I'm going, hey, actually,
Well, you look
we
at
could get some prizes.
a couple of factors there. A few years back, mining became persona non grata. Mining was considered bad for the environment, bad for everything. As we're running out of metal, kind of interesting point of time.
Right.
Made the market the cheapest it's been in history and the most difficult to finance in history. If we're running of all these metals and the narrative's so strong, why isn't money pouring into the sector, right? Major factor. So there's a cheapness I saw that was interesting. Number two, why wasn't this more competitive with borders and everything in the past? I mean, trade through commodities, whether you go from gold, currency-wise, or metals, that's been the history of time. Free trade or trade amongst partners and bartering and whatnot. And when you're talking about that, thinking about it, metals are now an issue. There's a supply issue. They're plentiful for many decades, but now they're an issue. And now what's happening? Wars breaking out. You've got borders going up, tariffs. Export bans. Now everyone's paying attention. So what's unraveling is the biggest movement, and we're kind of really cool to live in this movement of going from non-electrical and technology into the biggest technology turn in history. In the last 30, 40 years, we've gone from cell phones, podcasts, you can live remotely. You can do so many things. You can drive electric cars. Cars drive themselves. I take cars called Waymos in Arizona. There's no driver.
Oh, they have those there?
Oh, I've taken 90.
Are they cool? Yeah.
97 rides.
I see them on TV. I know, or the computer or whatever.
You sit in a Jaguar and you play your own music, your own temperature, and there's no one there in the car, and it drives you perfectly to your location. And you get out, you go, and it's a quarter of the price of an Uber because there's no driver.
So wild.
So welcome to the future.
Right.
But being in that flexion point of the future, and we all can't wait to flying cars or whatever is going to be next, right? It's the Jetsons, but 2.0 is looking at the commodities, where are they going to come from, right? And that kind of changes me as an entrepreneur, my perspective. It's not just finding something and making money. I have a hunger to keep going back in it again and again and again, much like many of the other entrepreneurs ahead of me, Friedlands, Ross Beatty's, and all of the legends that have come before me. When you get good at finding it, meaning you have a good team and you're able to have good instinct and pick some good projects to deliver it, there's a point where the financial part is not as meaningful as the impact part. And that's kind of like getting into the copper game quite serious here in the last decade has really taught me how important it is. And seeing that turn of the century where there's mines missing, money needs to go and find those. I like to be at the forefront, being part of that. It's our place in history.
Yeah, well, it's funny because when we talk about, like, let's say copper, if my mission is to go find copper, historically maybe my mission was to find copper, and I may have been, let's say, I wouldn't care where I found it, whether it was in Chile or Argentina or Peru or Mexico or whatever, or even Nunavut or something. Like, who cares, right? If it's a big copper discovery, I'm excited, I'm happy. But it seems like now it matters more than ever where these things are. And maybe that's always been true somewhat with copper. It's certainly always been true with, like, iron ore. You can't find iron ore off of rail or coast or anywhere we could literally move it. So, that's true with some things. But I guess now I feel like there's this other dimension to all this, which is this international game of chess and whatever that, I've never been one to kind of chase markets, right? Like, if in the lithium craze, I missed it. I didn't play lithium. I hated on lithium when it was happening. I understood it, and I believe in it as a commodity. I believe in it as a thing. I just didn't want to play it. I didn't want to chase that. I didn't want to have Denny fucking lithium tomorrow, right? Like, it was like, okay, I'll sit this one out. Like, I'm good. Other people will play pegmatites and I'll watch them and cheer them on. But it's not my thing. And I stuck with what I knew, and I go after great assets or great geology, and that's just like, okay, well, whatever. I like gold, and I particularly like organic gold a lot. So I go where that is, and I try to get the best real estate I can get and move my needle forward. But at the same time now, it's like, it matters where you find some of this stuff. It matters this whole dimension of politics and fucking,
Well, good point to make there, and a couple things there. Where you find it, how big that could be, the discovery is a massive factor. Like Peru, Chile for copper, Zambia, the Congo. These are where the big ones kind of are known to sit, right? The challenge, though, has been, for us anyways, down in Peru, it's you got to build a trust relationship between the communities and the government, because communities don't trust the government. Government, if they help the communities don't trust, they're going to spend the money wisely. There's a lot of concerns of corruption in some of these countries. And we've weaved it together really well. We've created an alliance with the government and the communities to get through it. If you find something in the U.S., if you find something in Canada, you're going to get a big premium as long as it doesn't interfere with Indigenous people or things, First Nations and stuff like that. It's tough. It's tough to find the right place to find something. You've got geological risk. You've got social risk. Grade is naturally king, but mining something or something mineable with infrastructure, a big swing. You're blessed if you have it, and you have to wait if you don't. But the cost of waiting is so high. Who wants to wait for a railroad that's not there for 20 years, right? The market is getting far more competitive. It's getting aggressive. I always think, as a explorer and as an investor, I stick to, like you, what I know. I don't go outside of copper, gold, silver right now because I know those best. I didn't participate. I didn't chase markets that I didn't know because I didn't want to be at risk of making a wrong decision. But I respect the people who've done it. But looking at where things are going with these majors, if I was in that seat, and maybe it's why I'm not, I would buy all the best quality companies now. Immediately.
I agree with you. That's exactly how I feel.
The majors are pouring cash, like huge cash. They're making cash. They're giving it away in dividends and stuff. But
yeah, forget about your stupid dividend. Go gobble everything up right now.
I would buy every single story that has a shot at something big. Right. I would buy them all.
Lock it in.
Lock it in. It would cost you pennies on the dollar what you're making.
Yep.
Because that's the growth model. And there's a lot of cycling that goes on between those big companies. They cost inflated an industry as a bottleneck last cycle, 2011-12. And I remember being in New York, sitting there with a fund manager, and gold was around $1,900 an ounce. And he goes, Ivan, how much money do you think Newmont's making right now, or whatever the company he picked? And he's like, profit margins like this. I thought it would be like 40, 50%. It was like 2 or 3% because geologists, trucks, everything bottlenecked and the cost was through the roof. And then they spend the next decade contracting, letting people go, everything, salaries came down, the costs came down, they put everything on mothballs, they contracted, they fixed the balance sheets. Now they have a massive movement. We're going to go back to the same cycle, but what's going to control the bottleneck here is at the end of the last cycle, they built all the extra trucks. They built the extra drills. There's so many more drills available that are just sitting there waiting to be used. So we're going to bottleneck again, and profits will get lost at some point in the cycle. So I like to look at, when trying to guess when this is going to end, I try to look at the profitability of the bigger companies. When do they lose their profit margin? When do drilling companies peak to record all-time highs where there's no drills? When I started Caden, it took us 2.5 months or 3 months to get a really crappy man-portable drill rig versus a proper drill rig. That's a long time, and we had to get in line with so many other people, and that was the beginning of the collapse of the last cycle, right? And you'd pay a geologist $400,000 a year at that peak point. Now $200, give or take whatever the number is, but everything was so expensive at the peak, and you could almost see the problems in the sector where it's going to come down. So now we're sitting here today. It's harder to find metal. You're hard to find metal. You have an incredible outlook on demand that's never been there before. And I hear of people that took a lot of profits on selling here in this market, and best we've seen in history, and coming out of a down 70% of your portfolio to up 300 or 400%. I understand it. But I like to look at the case study in Agnico Eagle because I was very familiar with it, a shareholder of it when they bought Caden. We took shares. They were $40 a share. and widely owned by everybody, incredible company. And there was nobody in the room at Agnico or myself or anybody during that transaction we took stock that would have told me Agnico's going to go to 300 or 350 per share where it is today, Canadian. And I make that point because I heard around the street at 180, 200 Agnico, a lot of very famous entrepreneurs, CEOs, and were selling their Agnico because they were like emphatic. They were like incredible. We never thought it would get here. Now it's at 350. And where's it going? 500, 1,000? I mean, where is this gold market going to go? You touched on earlier, generalists are still not in the space. And they come late. It's always starts with the pro mining guys first. And then it transfers down, and M&A frees up a lot of capital to reinvest. And then discoveries are getting made when the money really pours into the juniors. Although we've had a lot of money spent looking for discovery, and it's not as the same ratio of things being found, there will be luck that will come out of some big projects. Some long-term items like we've had will come online, and maybe we get the big discovery. I'm saying maybe there for full credibility. And all I'm going to say is, the paradigm is way different. And it's so hard to see it from the outside of the sector. But being inside the sector, there's a gap between senior management of major mining companies that are going to retire in the next couple of years because they've made too much money. There's a generational gap on aging because bear markets discourage new geologists coming on board, discourage the industry. And so not only do we need to educate the investing crowd of how important the sector is and bring capital in, which I'm going to make my effort to be a big part of that, but we have to find a way to inspire a whole new mining crowd of people to work in these companies to drive that forward.
I think we also have to train people on how to adjust their valuation expectations and the amount of capital they need to explore completely. Like that to me is a massive disparity. So we're still clinging on to the valuations and the money raising quantums and ratios that we had in the early 2000s. You see companies running out there and there's an abundance of capital and they're going out at 20 million pre-money and they're raising $5. It's like, can't do fuck all with $5.
No.
$5 million is like today is like $1 million back then.
But why? One factor is that the cost of running a public company has gone through the roof.
Of course.
The regulation, the cost of the exchanges.
Inflation, people's wages, like everything.
But the governance has gone crazy for juniors, right?
Yeah.
So,
it's super.
like you said, used to be $1 million could get you a discovery or two, now 5 is like a spit in the bucket. To run a proper junior company, the cost, if you do it properly with governance, compensation committees, audit committees, like you said, auditors, listing fees, exchange things, insurance. If you list on the New York Stock Exchange, NYC Amex to access U.S. capital, that's $600,000 US, $1 million Canadian, just for directors' insurance.
I know, it's just crazy because we did it at Newfound. It was almost $1 million just for a D&O insurance.
Just for D&O insurance.
Yeah, just for when we listed on the NYSE.
Yeah, we've been there a few times, and so that is crazy. And then the investor goes, what percentage of my money gets in there? We're good. We're north of 70%. We've tried to do the best we can, but we're in 2 different countries, like where we're based and we're multi-jurisdictional. And being in a different country like Peru, there's the whole infrastructure there costs money to be set up, to do it properly. So we're now protecting investors by the regulation, but our cost has gone way up to run these things properly and do them without any harm. The transparency is better. ESG has escalated to a new level, and the whole world got behind it, which is really good because it cleaned up the way mining is and the way mines are mined and operated. There's way more respect. The communities, governments have made things quite onerous to get permits, right? Well, permits take time. Burn rates are way higher. People are way more expensive. So how do you get money to the end drill bit to go make those discoveries, right? And I don't see that changing, to be honest. I think you just got to raise more capital.
100%. You like I talk to people, and you mentioned it. You said multiple times, discoveries are getting deeper and deeper and harder to find. And the reality is that is entirely true. But you could also sum it up as discoveries are getting more expensive to find. That's it.
Yeah.
They're getting more expensive.
Yep.
And the street needs to understand that too. You got to drill deeper, which costs you more. You got to, like all these things. So you got to pay up, Buttercup. Like that's what it is. And so I think that we'll have more discoveries. I think we'll be able to find the materials we need, but I think we're going to have to quintuple the amount of money that's being thrown at this.
So Keenan Jennings was on my board for 2 years. Changed my whole way of thinking on certain aspects of exploration. Brilliant guy. He was head of exploration for BHP for 5 years. Had worked on Oyu Tolgoi with Friedland Rio Tinto before that. And we talked often about it because I was really curious. Like, what's the largest mining company, base metal company in the world thinking with copper? Because we're in the copper space and metals. He said it's not, we don't look at it as a problem of copper. We look at it as a problem of time because the low quality copper is going to take forever to make it. If you make a big new discovery, it can be 20 to 30 years before it actually creates a pound of copper, right? And so I think we're going to get caught with a massive squeeze on metal prices, and that's going to put a lot more capital out there. But we're just going to have to go at the pace of the mines or incredibly high metal prices, and mining companies are going to do really well. The other problem we had, which is slowly going away, is when Bitcoin is skyrocketing, AI is skyrocketing. I was dealing with a very large investor out of Arizona, and he told me, he's like, I can just buy Bitcoin, and every week it goes up massive amounts of money for me, or the Dow or whatever it is. And that trained the investors to be shorter term. And mining is not short term.
That's a problem.
That's a big problem. So people they buy it on Monday, they want to sell it in 2 weeks and have this big return. You take a lot of bullets, and I'm sure you have as well, for things that take time that are out of your control. But they're out of your control, they just take time. I mean, if we all had it our way, a 6-month process would take 6 hours and we'd be on our way. If we could control it, we can't. But when you take investors, I'll just buy you once you get to that point. What is really cool is as you get closer and closer and closer to those milestones, your share price will speculate, it'll move up and perform. So if you want to get access to the big ones and be part of those 50x returns is crazy, 20 cents to $40 or whatever it may be, you're going to have to buy early, plug your nose and wait, and be patient, adjust your staying capital. And it's not a quick trading game, although the market has moved fast and we've seen things tripling, quadrupling at the majors that perform like juniors. It's kind of really curious to me of what does the junior wave look like this cycle with Agnico going up 8-9 times where it was, and Newmont doubling, tripling, Barrick tripling, what kind of filter down will it come to a market that has so few companies that actually have really good quality potential discoveries? And this is no fault to all the people trying. Just there isn't a lot of large, world-class, ones that we really need, discoveries on deck. There's probably 10 companies out there in the entire sector. And when you look at when the generalists come into the sector and the big mergers happen between the big guys, which we've seen, it's well on its way. Teck and Anglo is the most recent one that we're very familiar with.
Newmont and Barrick kicked it off with the Nevada JV or the Nevada thing earlier.
Newcrest, Newmont.
Newcrest, Newmont,
Gold companies are now hybrid copper companies because the money in copper is substantial and it's going to give a lot of stability to those companies. But I'm looking now at the mid-tiers. And when a lot of these majors, from what I've seen in my 25 years, when they don't have the growth, they move laterally, they merge because 2 + 2 = 4. 4 sounds better than 2, but it's really the same. It's just a bigger company, right? And the more these big companies merge, the more the mid-sized companies merge, or else you lose your market share and you can't compete on that kind of global scale, right? So a lot of M&A, I think over the next 18 months, I hear some of it's rumbling in the background in process. I think the comment you and I made earlier about gobbling up all the good quality companies, I think that's going to be late. Everything's late in our business when it happens, but it kind of whipsaws and goes. And someone's going to make a monster, a couple monster discoveries.
There's going to be, I think there's going to be like an Ian Telfer figure that's going to emerge. I don't know who it is. Maybe it's me, maybe it's you, maybe it's somebody that's going to come in there and convince a half a dozen of these CEOs, assets to say, let's glue this up. Let's sew all this up and put this tray of brownies together. And that's going to create a parfait that will go to 20 billion or 25 billion and then get gobbled up by
a bigger one.
And you'll do a lot of their heavy lifting for them by gluing it all together, and they'll be thankful for it, but the big boys at least. And I see that happening. That's probably soon.
In our business model with Copernico, if we get currency or when we get currency, I don't want to be too presumptuous here. We got some credible targets, but it could give us that double-digit currency. I'm going to buy things. I want to buy things, and I want to gobble up all the quality, and I want to create. If it's not bought out by a major, I want to become a mid-size.
Well,
copper
let's do it
company.
together. That's what I want to do. That's why I named it Pirate Gold. To take over ships.
Take over ships. But I mean, if you think about it, it should be happening. It's not. There's an opportunity there. What do we need? We need currency off discovery. How do you reward shareholders, right? You can reward them with a takeout by a bigger company. And we have a couple majors as shareholders. We have that competitive background already there. That's a good possibility. But if it doesn't get to that threshold, how can you benefit more? And I think the same as me. We're big shareholders. How can we make more for our shares, for the investors? And looking at the obvious block of companies to buy, everyone's staring at them, and just no one's buying them, and everyone's taking their time.
And they're still cheap.
And they're cheap.
They're cheap. They're mostly cheap. Yeah.
And then the CEOs behind a lot of them are exhausted from the bear market. They're frustrated.
They don't know what to say anymore. They don't know what to do anymore. Okay, so I got a question. I'm not sure how long we've been going. Probably have to wrap it up.
Yep, sure.
But I got a question for you. Maybe this is a good place to leave it. Okay, so this is for all the fellow CEOs out there. We've got generalists coming in. What does Ivan Bebek say when he pitches his greenfields exploration story or discovery story? And the investor says, "Thank you very much, Ivan. I've got a question. When are you going to start the mine?" What's your answer to that? To those guys? You know the guys.
I get asked that question a lot.
100% you get asked that question. What's your answer to it? How do you handle it?
I answered honestly. We're looking for something big enough that we won't get to mine.
Right.
And enough quality behind it that it's going to be bought by a major. So if we're right with our thesis, and it can be all or none, but if we're right with our thesis, it's going to be big enough that the world mining market will buy us. And that's how I answer that. So I plan for it. I plan for a mine to be present the day one of stepping on the property, because that's going to give us a premium if we're organized with our communities, with the environment, everything else. But like you, I go for something big enough that if I find it, it's definitely going to have a chance to be bought in a competitive bidding process. And so it takes it away. And if you look at the reality of a big copper discovery, it could be 20 years before it goes. I'm 48. I'll be 68 years old. I'm not going to be in this scene.
We're not going to be mining it.
No. Well past it. And not because we're not committed to the long-term value, but our business models are quite simple. Even if you and I wanted to build it, if we make that big discovery in this environment and it qualifies as a top 20 mine in the world, it's going to be gone within hours. Everyone's watching. Everyone's looking for it. And so, that's the easiest question to answer in today's market. After everything we spoke about, the market and metals and the tariffs and all of the things that have compounded, nobody's going to be able to hold on to something that big or that good. I'm involved in five public companies. 4 of them have majors invested, or a JV in one, but the other 3 have invested in major mining companies in those. That is a pretty big tell sign of what's going to happen if one of these things starts working. So, like you, we're going to get bought out and go do it again and just write bigger checks. Yeah,
and then tell people like it's interesting. I get the question. I handle the question well. Similar answer. I'm always truthful with it. Like same with like Newfound Gold early, but I used to get that guys who go, I have one hole in the ground. 1901 when we did the IPO, and it's a great hole. And then people were going, "When is it going to be mine?" I go, "Buddy, listen, this is not going to be a mine anytime soon. This is we got a lot of discovering to do, and we might have multiple deposits or maybe have none, but we're going to figure this out." And that was always fine. You can get them over the line. But it is interesting though, because the generalists really don't understand this space. They really don't, and they're coming. We've got to be ready for them.
On that point, though, question is when is it going to mine, or when am I going to make money off of your stock, right?
Well, that's what you have to turn it into.
So you turn it into that, right? Because the education, again, is lacking. And I think this interview is great, and I really appreciate being here. The amount of insights that we can share with what goes through our heads, what we're facing, what we're dealing with, why we're in this space. Not here to sell anybody anything. I'm here to let people know that this is tough. If we get lucky, it's going to be extremely valuable. And we're going to keep going and doing it again and again because we love it, right? As far as the sector goes, it's changed. It's the most unique in history for the principles we've talked about. The new population, the new modernization, all of the above. But the biggest thing that I go to bed with at night, people say, what do you lose sleep on? Mines are harder to find. And the easy ones that were sticking out of the ground, you can put your hand on the rock and it's drill underneath, it's there. There's very few of those opportunities around the world. And now they're plagued with pretty tough social and governments involved. And it's become a lot more political, both socially and government-wise. So yeah, discovery is worth more. It's going to take longer. It's going to be harder, but you're going to get paid way more than history. I'm about 80% in of my entire net worth into my deals and what I'm doing here in the space. And it's the most uncomfortable long I've ever been, but comfortable at the same time because of the opportunities, the quality, and the opportunity in the sector that I think is just beginning. So for me, I believe that we're not going to recognize the market we're in today. If you and I sit down, we should probably do that in 18 months from now. We're going to look back in 18 months, and I would
check the prophecies.
Bet you a beer. We'll go for a beer and say that this is going to be an unrecognizable market to where it is today. I anticipate, outside of like a black swan event, like an 08 style correction, which I think is very possible because of all the debt. I think you're going to see a new paradigm where every penny stock is above $1. I think you're going to see what we're hearing right now, so much capital that has nowhere to go in the sector. Then eventually it's going to spread across everything. Kind of all ships will float.
It's going to be tens of millions of dollars will be the new millions of dollars, like for financings. And we're going to be, it's a whole landscape, I think, is going to be completely overhauled. I believe that.
And why make that comment? Because you could almost pick any quality. You could pick any quality junior explorer now, cover your eyes and just pick them, and you're going to make money.
100%. Rising tides will raise all ships more
even
than
the
likely.
Yeah. So for me, to try and separate ourselves from all those, experience, quality of asset, time spent. Time spent a decade into a project, unlocking social is as valuable as the discovery itself. And so, and I like big things.
And you like big things.
I like big things.
I was going to say, big things.
Yeah.
So for the listener, if you follow Ivan will have conviction on something, and he will play it, but he will play it big. It will be a big land pack. It will be a big idea. And I've always found that with your ideas. You've always had big things. And that's a page I've ripped out of your book. So
appreciate that. And you've done extremely well.
Thanks. Well, I'm still trying. I got a lot of work catching up to do, but we're working on it. So, but thank you so much for your time. I really appreciate the opportunity to talk to you and ask you some of these questions, and hopefully you come back on.
Oh, absolutely. Love to be on. I want to quantify some of the comments we made when they all come together.
We'll check it. We'll get somebody to make a list, and we'll come back and check them. So thanks, Ivan. Take care. Thanks, everybody.
Thank you.
Enjoy your times.